Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a fresh week, and after the RBI's bonanza that we saw on Friday, we're expecting the extension of this rally today and throughout this week too. Now, the gift Nifty trends have been indicating the same, a gap up start for our own markets. So, after Nifty stood above that 25,000 mark in the last session, 25,500, that is what is something that we are keeping an eye out for. And that's what we are hoping for the markets to extend its rally after it saw the RBI's bonanza from last week as well. Now, the global handover, if you look at that, that is quite positive. On Friday, US markets did end on a good note. We had the better than expected jobs report, which sprinkled the rally in the US markets as well. And even today in the morning, the Asia Pacific markets have started the day on a very good note. So all across the markets, be it Japan, Korea, Hong Kong markets, all of them are doing well. On the other hand, Australian markets, that is closed for a public holiday. Now, the rise is twofold for the Asia Pacific markets. Now, first definitely is your good US jobs report that like I was mentioning. And the second is the US-China trade talks, which is expected to be held later today in London. So yes, that is some optimism which is kicking in the markets, and we can see all across for the global markets also, we see a good start for there. Now, coming back home, we'll watch out for stocks for today. Insurance will be in focus, as some of the reports have been indicating that motor insurance premiums could see a hike. And then we'll also be watching out for gold loan stocks, which was there in focus on Friday as well, and today also will be in focus after the RBI did release the fine print on LTV ratios for both the small ticket and the high ticket loans as well. So yes, all of these stocks will be in focus today. We'll take more stocks in focus. We'll also be taking your stock related queries, so keep posting them on our live feed and we'll take them up shortly as well. Now, before we delve deeper into the show, let's take a look at the top headlines this hour. Stocks on Wall Street end Friday's trading session on a positive note on the back of solid jobs report. The Dow surges over 440 points while the S&P 500 crosses 6,000 for the first time since February. Asia Pacific markets are also trading with gains mirroring Wall Street moves as investors await Beijing-Washington trade meeting. The gift Nifty is indicating a gap up start for our own markets. Crude oil prices climb, posting its first weekly gain in 3 weeks after favorable US jobs report and resumed trade talks between US and China. Meanwhile, gold prices fall as strong job report dashed hopes of an interest rate cut. And the Trump-Musk feud escalates as the president warns that there would be serious consequences if Elon Musk backed Democratic candidates to run against Republicans who vote in favor of GOP's budget bill. He added that he has no desire in repairing his relationship with Elon Musk. And Commerce and Industry Minister Piyush Goyal met with UK Foreign Secretary surrounding the India-UK FTA agreement and pledged for deeper bilateral ties. Now, if you look at the last trading session and of course the last week also, both the benchmark indices logged a positive return and they broke the 2-week losing streak to post a good weekly gains last week. But on an individual level, on a benchmark level, Nifty did gain about 252 points to end above that 25,000 in the last session. And this was the highest close that the Nifty saw since May 16 this year. On the other hand, if you look at the broader end of the market, small caps also extended gains to the 5th straight day. It has hit a 5-month high. So good traction which is coming in from the broader end of the markets also. And among these sectoral indices, Nifty Realty, Bank, Auto, all of these indices were the top sectoral gainers, given that they were the rate sensitive indices, and the RBI did surprise the markets by about 50 basis points rate cut as well as 100 bips CRR cut. So we could see all the rate sensitive sectors being in focus in the last trading session. The RBI also shifted its policy stance from neutral to neutral from accommodative. So that is coming in from the RBI as well. One of the key data that we'll be watching out for this week is your India's inflation data, which is due on June 12, which is later this week as well. So we'll be watching out for the retail inflation figures, given that RBI also reduced its FY26 forecast also from the inflation perspective. Coming to some of the cues that will set the tone of the today's trading session, where the fund flows, where we can see the optimism continues to prevail. FIIs have bought stocks which was worth about 1,000 crore rupees in the cash markets in the last session, and DIIs also with a larger buy. Of course, given the OFS and block stock deals we've been seeing, but other than that, 9,000 crore rupees plain and organic in your cash markets, that is came in from the DII's front. Coming to the next, which is your option cues data, positive optimism prevailing from that front too. Nifty put call ratio to 1.05 levels from 0.98 levels. And finally, coming to your F&O ban list, one stock which has been added, that is your Hindustan Copper, and the stock that continued to be a part of the list, that is your Aditya Birla Fashion and Retail, Chambal Fertilizers and Manappuram Finance. None of the stocks have been removed, however. Now, just a couple of minutes, just 5 minutes to go before we go to the open. But let's look at the pre-open rates and how it stands at this point of time. If you look at the pre-open, still, we can see a good optimism. Sensex up about 350 points and Nifty is also above that 25,150 mark. So yes, we are hoping that we start on a good note today as well. But before we get on to that, let's quickly get on board with our technical expert of the show. Joining me is Rajesh Palviya of Axis Securities. Rajesh, good morning. We have the RBI's policy bonanza. Can we expect 25,500 soon for the Nifty?
Good morning, Lovisha. Yeah, definitely. So looking at the broader market and the kind of recovery which we have witnessed in the last week for Nifty as well as for the Bank Nifty, it's almost, on a verge of giving breakout of call concentration area of 25,000, 25,100 strike. And I think once the Nifty manages to cross about 25,100, I think we may witness a short covering action in market, and then Nifty can scale up to the next target towards 24,400 to 24,500 or 25,500 kind of target on the near-term basis. So yes, I think one should remain on the long side of trade. Your stop loss should be now placed at 24,900 till these levels are intact. Any minor decline, any volatility should be used as a buying opportunity. And yes, we are hoping that Nifty can scale to the level of 25,400 to 25,500 zone. Bank Nifty is looking more promising. The way Bank Nifty has witnessed a short covering in previous day, I think the Bank Nifty is ready to move higher towards 57,000 in the continuation of this up move. So Bank Nifty is also looking very bullish. Here also one can ready to buy if you get any kind of minor decline in volatility. So for Bank Nifty, 56,200 needs to keep as a stop loss. 57,000 is the first target where we are projecting in the this week for Bank Nifty.
That's right. Good optimism coming in from the Bank Nifty index. But apart from Bank Nifty, how do you see the Nifty Realty index at this point of time? 5% uptick we saw in the last session. Do you believe the rally is sustainable going ahead?
Definitely. So real estate space has done well in last couple of weeks, and the way most of the real estate stocks have moved up, yes, there is a possibility that we may see another 2 to 3% kind of up move in Nifty Realty in the continuation of this up move. Stock like DLF, Oberoi Realty, Lodha, Godrej Property, all these stocks are showing good traction even at a higher level also. And the way most of the stocks manages to give breakout on their near-term, short-term charts, I think yes, another 2 to 3% kind of up move we could expect in Nifty Realty. As well as one can focus on the stocks like Prestige Estate, Oberoi Realty and DLF from these pick. These three stocks are looking very promising and bullish on the near term to short term trading point of view also. So we are holding a bullish view for Nifty Realty as well as the real estate stock in the this week also.
Okay. So 2 to 3% we can expect for Nifty Realty Index also, Rajesh. Rajesh, what about the small caps? Because they were also one of the outperformers last week. Do you believe the construct is still favorable, and how much of an upside do you see going from here on?
So I think the way broader market is showing buying interest, and the benchmark indices both like Nifty Bank Nifty is holding above to their near term short term moving averages and above the breakout levels. So I think that is giving the confidence on the mid cap and small cap space, and we do believe the kind of flows which we are witnessing in the market, I think yes, small cap as well as mid cap both space can continue further more upside, and I think the outperformance is likely to be there in this both space. So yes, Nifty small cap can scale up to the next target towards 19,000 in the continuation of this up move. So buy on dips would be the strategy until the Nifty small cap not breaks below 18,200 level. I think the setup is looking promising for near term perspective also. 19,000 would be the next target.
Okay, 19,000 will be the next target for the small cap index. But we'll be having the first rates coming on your screen. And that's the first rate coming in. We're seeing a good start for our own markets, and 25 100. That is where we are starting off right now. 0.5% gains coming in from the Nifty 50 index. Sensex is also soaring in the trade with about 300 points gain. So yes, we are seeing a good extension of the rally that we were hoping for, given that we had a good global constructor to start off with also. So the optimism which is prevailing in the Indian markets doesn't come as a big surprise, and given that the RBI bonanza that we saw from Friday, and we are positive on the liquidity front as well, and of course on the inflation front on the macro level as well. So we are seeing a good start for our own markets. So yes, 25 100, that is where we are starting at. If you look at the sectoral indices, it's all the green all over the screen. We are seeing a good buying interest right now. Nifty IT index with about 0.5% gains coming in. Bank Nifty with definitely with more 0.5% gains. Pharma index doing well with about 0.3% gains. Nifty Realty index after last session's sharp up move is seeing a gain of about 0.3% or so. So yes, all in all, we are seeing a good buying interest emerging in the markets. Small cap and mid cap indices, both of them also have been eking out good set of gains. Small caps with about 0.7% gain. So both of them have been outperforming at this point of time for the headline indices. Now let's take a look at some of the top gainers and the losers on the Nifty 50. Top gainers, if we see Shriram Finance, IndusInd Bank, Axis Bank, some of the financial stocks are doing well in this market. Bajaj Finance, Kotak Mahindra, all of them seeing a good gain of about 1% or so. On the other hand, the top loser on the Nifty 50, that looks like your SBI Life Insurance. We did see a development coming in from the insurance segment that, there are reports which are indicating that we could see an hike in the motor insurance premiums. That is something that we'll be watching out for. Other than that, we can see Eternal, Titan, Tata Steel, all of them seeing, very mild losses, but however, dominating the top Nifty 50 losers list at this point of time. But yes, let's take a look at some of the insurance stocks at this point of time. SBI Life definitely not doing well. Let's take a look at how HDFC Life has been doing. That is also, down at in this market. If you look at ICICI Lombard, even that stock is not doing well with about, a very negative bias that is coming in. We did see some reports that the government has been reviewing plans to raise its motor third-party insurance premiums by an average of about 18% or so after recommendation from the insurance regulator. Now, given that insurance stocks have seen quite the buzz recently also, Rajesh, how do you view this development? We could see some hike in the motor insurance premiums to solve the loss ratios that majority of the insurance companies have been facing due to this. How do you see the development going through at least in the near term or so?
We have seen, most of the general insurance stocks have moved up. The way ICICI Lombard managed to give breakout on the near-term chart, I think if it's sustainable 1960, there is a possibility that, this stock can continue furthermore upside towards 2100 to 2150 kind of zone. So I think most of the stocks from this space is looking attractive, and I think one can hold the position. So ICICI GI is looking promising. 1965 should be your stop loss. Target is 2100 to 2150.
Okay. All right. Let's take another stock in focus. That is your L&T. The stock is doing well. The company did announce a 500 crore ESG bond issuance deal. Now, this will become the first Indian corporate to do so under the SEBI's newly introduced ESG and sustainability linked bond framework. Now, if you look at individually as a stock, L&T, that is up about, 15% or so from the April lows itself. Rajesh, how do you see the technical construct for L&T going ahead?
So if we analyze on the longer term chart, yes, stock is holding the bullish view on the longer term chart, and the way near term charts are now, showing strength, and stock is now approaching to its multiple supply zone, which is placed at 3800 kind of zone. So I think once stock crosses about 3800, I think this stock has potential to cross 4000 level also. But for near-term perspective, yes, those who are already long in the trade can hold the position with the stop loss of 3630. And I think if it continues to trade above 3630, there is a possibility that, stock can approach towards 3800 to 3850 kind of level in the continuation of this up move.
Okay, all right. So bullish thing coming in for L&T. Let's take a look at Garden Reach. The company did sign a memorandum of understanding with Sweden and Denmark. The pact is meant to boost the marine systems and enter the expedition cruise as well. The stock is doing well, 2% gains that is coming in. And if you look at from the 1 month perspective of two, we've seen 60% plus run up in the past month. Rajesh, do you see some consolidation now going ahead in the medium term, given that we've seen quite a sharp up move in the Garden Reach stock?
I think after a rally now, stock is consolidating at a higher band of the momentum. Looking at near-term, short-term structure, stock is holding the bullish view, bullish stance, and I think till stock is trading about 32 70 kind of level. I think there is a possibility that again stock will resume its uptrend, and the possible target we may see towards 3500 to 3600. So I think one can hold the position with the trailing stop loss of 3270.
Okay, 3270 is the stop loss which we can eye out for. Now let's take some of the viewer queries which is popping on our live feed. The first query coming in from Pooja Khanna. She's asking that she's holding Zentech at 2200 and what is the target and stop loss that she can be watching out for. She's seeing a bit of a loss at this point of time, Rajesh, but if you look at the past 1 month, the stock is doing quite well. What do you suggest?
I think hold the position. Stock is in recovery mode, and the way stock is trading above the near-term moving averages, about 20-day, 50-day moving average. I think we may see a rally towards 2150 to 2200 in the near-term perspective. But again, 2200 is the immediate supply zone where she has bought. So I think once the stock reaches towards 2200, one should review the position, whether the buying traction is there or not. But the near-term chart is suggesting 2200 may act as a supply zone. So review the position around those level. If it crosses 2200, yes, hold the position for next target of 2400.
Okay, all right. That is something that we need to watch out for. Let's move on to the next query. When Nitin Shahji is asking the view on Bajaj Healthcare. Bajaj Healthcare, how do you view the stock, Rajesh? Because from May onwards, after the stock hit a peak, the stock is down about 15% or so. And we did see good numbers from the March quarter as well.
Stock is still in downtrend, though there is some consolidation is happening at lower band, but still until the stock not crosses above 555, 560 zone, we may see some sideways consolidation in this counter. Above 560, yes, there could be some buying action may emerge in this counter, and then possible up move towards 600 we could witness on a positional perspective. But at this juncture, I think until the stock not crosses this level, it may remain in range of 510 to 555. Once we get the breakout above 555, there could be really towards 600.
Okay, all right. 600 rally with that we can watch out for Bajaj Healthcare. Let's take a look at gold loan stocks because that is once again buzzing in today's trading session. Both Manappuram and Muthoot Finance is trading with about 1 to 2% gains at this point of time. And even Morgan Stanley has come out with its report saying that the RBI's new gold loan norms can benefit stocks like Muthoot Finance and Manappuram Finance, and they've maintained an equal weight rating on both of the counters. How do you view from a technical perspective, Rajesh, for both of them, for the near term at least?
I think both stocks are looking bullish, and the way Muthoot Finance is now trading near to its all-time high trajectory, I think if it continues to trade above 2450 level, I think the next target towards 2650 we could see in a near-term perspective also. So one can hold the position even on the Manappuram also. The way stock has moved up on a daily as well as on the weekly chart, I think here also we could see next target towards 265 to 270. But keep trailing stop loss. At this juncture, I think one should follow the stop loss of 244 to hold the position on a positional perspective.
Okay, all right. Let's take another viewer query at this point of time. Satya is asking the view on Aditya Birla Retail and Fashion. How do you view the stock on the counter, Rajesh? We did see a block deal and of course a demerger earlier as well.
So I think still stock is consolidating at lower band of this deal. Looking at the near term structure, the immediate support is placed at around 74 level. So 74 is the crucial support area for Aditya Birla Fashion. If it's break below 74, we may see further more down move. But as already stock has corrected sharply and stock is in oversold trajectory, so I think we may see some consolidation here only. On the higher side, 84 would be the resistance area. Once stock crosses above 84, yes, we could see some traction towards 88 to 92 on the higher side. But I think it may take time. Some consolidation would be there in the stock price at lower band.
Okay, all right. Let's take another viewer query at this point of time. Hemant is asking the view on between Lodha and DLF, which stock is a better entry point at this point of time. Rajesh, any views on this? Because definitely if you look at from the past 1 month performance, DLF has been an outperformer with about 40% gains.
I think looking at the structure, Lodha is looking more promising. The way stock is now approaching towards its previous swing high of December 2024, I think the stock is ready to give a breakout. And I think if it's trading, if it manages to cross above 1540 level, the next target for the stock we can see towards 1650 to 1700 also. So I think Lodha for trading point of view is looking attractive. All the stocks from the real estate space is looking promising. I think even he can focus on overall Realty also. That stock is also looking attractive, and the way stock managed to give breakout of consolidation of almost 10 to 15 week. I think this stock is also ready to extend its gain towards 2050 to 2100. So Lodha, overall Realty, DLF, all stocks are looking promising. I think maybe we can see another 4 to 5% kind of up move in the positional perspective.
Okay, 4 to 5% up move from a positional perspective for Realty stocks. Let's take another viewer query at this point of time. K. Naga is asking the view on Praj Industries. He's asking whether he should buy at the current market price. If you look at from the 6 months perspective, Rajesh, the stock has not been doing well. From January onwards, it's on a negative trend, and even from the Q4 numbers, it was not quite positive. Profit has more than halved at this point of time. Would you recommend this to be a buy at the current market price?
So those who are looking for investment point of view, yes, one can invest in this counter. Though stock has corrected significantly from the recent high of around 800 level, 900 level. I think the way stock is consolidating at lower band, and now after the consolidation, stock managed to give breakout over to 20-day as well as 50-day moving average. So near-term charts are now showing strength. I think if stocks manages to hold above 485 to 490 zone in next couple of weeks, there is a possibility that we may see a rally towards 555 to 570 zone in the near term to short term perspective. But for investment perspective, I think it's available at attractive level. So those who have horizon of 6 to 8 month kind of time frame, they can buy and accumulate this stock with stop loss of 465. I think in recovery, we can see a target towards 650 to 700 also on a 6 to 8 month time frame.
Okay, all right. Let's take another viewer query at this point. Naveen is asking the view on Tata Motors for the near term. How does the stock look like on the charts, Rajesh? We did see that the stock did pick up pace in the month of April, but after that we are seeing the stock has not been very range bound and very consolidative move from the counter. Anything from the near-term perspective? You have any thoughts?
I think Tata Motor may remain in consolidation for some more time, but the way stock has showing, after recovery, some supply pressure is there at 740, 750 zone. So until these levels are not taken out by the stock on the higher side, we may see some consolidation in range of 700 to 740, 45 zone. Once stock manages to take out above 745, then we could see some short covering towards then stock may extend its gain towards 770, 780 kind of zone. So those who are looking for a little longer time frame can buy and accumulate this stock. On the downside, 685 should be your stop loss.
Okay, 685 stop loss for Tata Motors. Let's take another viewer query. Komal is asking the view on SBI for the next 6 months to 1 year, and she's asking what is the possible target and the stop loss for the counter. I know Rajesh, you're quite bullish on the banking space, but any target levels that you want to specify for SBI?
Definitely. So SBI is looking very promising from the PSU banking basket, and I think the way charts are now shaping up, stock is poised for giving a breakout on a short to medium term perspective. 835 is the key resistance area. I think once the stock crosses over 835, we could see a rally to unfold towards 900 to 920 kind of a level. So buy and accumulate would be the strategy for SBI, and we do believe that going forward we may see a higher target towards 900 to 950 for SBI. So buy and accumulate with stop loss of 770.
Okay, 770 for a stop loss for SBI. Let's take another viewer query. That is your Panu Anil is asking the view on Voltas for the near term. Voltas, if you look at from January onwards, the stock has been fairly down as well, from 20% downtick we can see at this point of time for Voltas. But anything you want to highlight, because the Q4 numbers were quite positive.
Voltas has witnessed significant correction, and after correction now since last 5-6 week, stock is consolidating in a very narrow price range. Some recovery was there after this consolidation. Stock is now comfortably holding about 20-50 day moving average. The way near term charts are now placed, I think if it's managed to sustain above 1260 level, I think some more recovery we could expect in this counter on the near term perspective. 1350 to 1360 would be the next target. So keep your stop loss around 1260 to hold the position.
Okay, 1260 to hold the position. All right. Just one last question before we let you go, Rajesh. Anything that you are finding value at this point of time and you want to highlight as your top picks?
I think lot many stocks are showing traction. I think CAMS from capital market related theme is looking very attractive. The way stock has formed a base, building activity is already done. Stock is ready to extend its gain. We are projecting target towards 4400 to 4450. So CAMS is looking promising. Keep stop loss around 40 to 60. Some of the IT stocks are also looking attractive. OFSS is also showing strength. I think here also we have registered a breakout of almost 6-7 week consolidation. OFSS can extend its gain towards 9300 to 9400. One can buy and accumulate this stock with stop loss of 8960. Another stock is JSL. Jindal Stainless is also looking promising. We are projecting target towards 740 to 760. One can buy and accumulate this stock with stop loss of 685.
Okay. All right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Rajesh. Thank you so much for your time, and we hope that we connect with you soon. All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at the markets, they are on a positive foot. Sensex up about, for 395 points, which is nearly 400 points gain coming in for the Sensex. Nifty is also doing well, 25,100. That is where it is standing at this point of time. If you look at some of the sectoral indices, Nifty Realty has slipped into the negative territory. Some profit booking we can see on the Nifty Realty index. Otherwise, IT index, one of the top outperformers with about a percent gain, given that we did see a strong US jobs report data coming in, and the US markets also saw a good front. So yes, IT stocks definitely doing well on that note. Auto and bank indices are also doing well, both of them seeing a nearly a percent gains or so. And from the broader end of the markets, small caps doing well with about 0.5% gains, and mid caps also with more than 0.5% gains coming in for that. But let's move on to our next guest of the show. We have market expert Ambareesh Baliga joining us. Ambareesh, good morning.
Good morning.
Baliga sir, we did have the RBI bonanza. Would you expect this rally to be sustainable going ahead, given that we are standing good on the macro level?
No, I think one needs to see, because the RBI policy was something which was quite surprising, because people were expecting 25 basis points and they gave 50. and the sort of cuts which were there, across. I think that was quite positive. For the markets, and we have seen that. Move in realty. We have seen some amount of move in auto and the other sectors which are connected to the interest rates. But then, see, the markets were supposed to be in a broad band of about 23,800 to 24,000 on the lower side, 25,200 on the upper side. Now we are close to that upper end of the band. And in case we are able to cross this 25,200 levels decisively, then I think the momentum would continue, and that would be pushed more by liquidity than anything else. Because if you look at the macros, yes, most of the macros have been positive. If you look at the earnings, they were quite mixed, but more or less on the positive side, because the expectations from the analysts and the investors was quite low. But then, does it justify a level of 26,000 or 27,000? I doubt it. So, in case the next move happens, I think it'll be more of a momentum driven by liquidity.
Okay. Well, Baliga sir, now that we are seeing both tax cuts and easing interest rates, how do you view the consumption basket? Do you believe that since they have been so far underperformers, do you believe that we can see some bit of improvement going into the second half of this year?
Absolutely, because the effect of the tax cuts are being felt now, because the April salary had come in the beginning of May. Now the May salary has already come in. So I think this is what will drive consumption. Going ahead, at least in the near future. And again, the other thing which should be looked at is monsoons, because monsoons are again expected to be normal to above normal, and this should I think push the rural consumption story. So overall, I think one should be positive on FMCG and white goods as well as two-wheelers. I think these are the couple of sectors which should do well. From the consumption theme.
Okay. Baliga sir, apart from consumption, let's talk about realty space also, because that is also one of the other rate sensitive. And we did see that the Nifty Realty Index saw a surge of about 30 plus gains from the April lows. From Q4, if we look at the order pipeline was strong, but majority of the companies did revise their launch guidance because they saw a delayed execution. So, do you suggest that this space, holds good going into the medium term at least?
See, one has to be a bit selective out here, because there has been an execution slowdown. Inventories are getting built up as far as the luxury space is concerned, and especially if you're talking of the Mumbai MMR market. But then sentimentally, because of the rate cuts, which clearly has a direct effect on realty, most of the realty stocks moved up quite well post the rate cut. But then again, if you look a bit deeper into it, the rate cut does not affect the luxury housing, because they are not dependent on taking loans to decide and buy. Decide to which unit to buy and at what price, because they are the ones who have the money bags. It actually affects the affordable housing space. And we have seen some amount of slowdown in the affordable housing in the last close to about 12 to 18 months. I think this rate cut will give a lot of fillip to the affordable housing space. So one needs to look at the stocks which are more into affordable housing as compared to luxury.
Okay, all right. And if we focus on railway stocks, because even they have been in focus once again. Last week also they saw quite a stellar run up. Do you believe that this euphoria is good enough to hold on to, at least fundamentally?
Fundamentally, I would still find railway stocks expensive, although the order flows have been excellent. If like I would look at both defense and railways in the same basket, because the sort of order flows which they've been getting, and the sort of sentiment which has been created, especially for defense post the Indo-Pak war. I think it is more of sentiment and momentum which is driving these stocks more than fundamentals as such, because clearly I see execution issues going ahead for both the sectors, railways as well as defense, because it's not possible for most of these companies to increase their capacities overnight. Maybe in the next 3 to 4 quarters, we'll start seeing execution issues happening. And that's when possibly the markets will look at the reality of the space. And possibly that's the time it can correct. So at this point of time, I'll not really recommend fresh buying into both railways as well as defense.
Okay, okay, okay. Baliga, so you mentioned about railways and defense also. I want to understand for power stocks also, and we'll complete the entire PSU theme as well, how it is going on in this year as well. How are you finding the power stocks at this point of time?
Power stocks, again, we had seen some amount of correction because of, I mean, the theme going away from green energy as far as President Trump is concerned. But then I think there is a decent amount of value in this space. So I would still look to buy something like a Tata Power or a NTPC at this point of time.
Hmm. Okay, okay. And at this point, experts are calling this market as a price to perfection. But where do you think that there is anything that is mispriced or still holds some comfort for investors to buy onto?
To buy into, I would surely look at something like specialty chemicals, which has been my favorite now for a while. And some of the stocks have moved decently well. But then I think there's still a decent amount of upside in this space if you're talking of the next possibly 2 to 3 years. Because India has built capacity in a number of specialty chemical verticals. And in some of them, we are possibly the leaders, we are possibly number two or number three. So that keeps us, puts us in a position, I think, from where we can really utilize the opportunity, which I think the global market is giving us.
Okay, okay. Now, if you talk from the earnings perspective, Baliga sir, how do you believe the Q1 at least to pan out? Because we have seen a slowdown in the wave of downgrades in the last quarter itself. But do you believe Q1 would also hold the same, promise going ahead in terms of at least downgrades, and what are we anticipating from there on?
No, see, I mean, the way we should look at it is it's always expectation versus delivery, and the expectations in Q4 were pared down to a certain extent. Now, based on the earnings, we are still looking at Q1 numbers being pared down to a certain extent. So, when the earnings come, in case they are slightly better than what we are expecting, we should possibly see a decent sort of a move in the markets at that point of time. So I would be a bit positive, looking at the Q1 sort of numbers which can come, because I clearly expect some amount of uptick.
Okay, okay. But from if you compare the large caps versus the mid cap and small caps, which one did you feel that relatively fared better in the last quarter, and which one would you believe that still holds a little bit of a comfort going ahead into FY26?
No, I think one needs to be very selective out here because you really can't generalize large caps versus mid caps. But then even looking at from a very broad perspective, I would still be looking to add more of large caps at this point of time than mid caps. Mid caps, I'll be very, very selective.
Okay, okay. Any sector that you still believe that that investors should remain on the sidelines for the time being?
As investors, like I said, one should remain on the sidelines as far as railway stocks and defense are concerned. I mean, if you're having these stocks, possibly hold on with a stop loss. But then I think it's a good space for traders to trade in and out. But for investors to buy fresh at this point of time, I would suggest not to. But like I said, if you have these stocks in your portfolio, hold it with a trailing stop loss.
Okay, okay. And Baliga sir, what should be the investors' trading strategy this year at least? Do they believe that they should conserve certain amount of money until there is a reasonable earnings which is visible from the quarters going ahead?
See, as investors, like the view I had given some time back was that I think we have seen the bottom. That 22,000 levels which we had seen, 21,800, 22,000 levels was the bottom. And we were close to about 40% in cash around that time. And we have invested that. And currently we are holding about 10 to 15% cash. So in case we see like another bout of correction, which, like I said, possibly may not go below 24,000, because the band overall I'm talking of is 20,800, 24,000 to 25,000, 25,200 levels. So in case we see the lower end of this band, I think that's the time to again get fully invested. But at the same time, in case we see the markets moving beyond 25,200 levels and the momentum taking it to 25,800, 26,000 levels, I would possibly book out to a certain extent again and get into cash.
Okay, okay. All right. All right, with that, we have to let you go, Baliga sir, but thank you so much for your time. We hope that we connect with
My
you soon.
pleasure. Thank you.
All right, let's take a quick check of the markets. Right now, we are holding solidly in the green. However, we are off the day's highs at this point of time. Sensex is up about 289 points, and Nifty is also above that 25,000 mark. However, we are below that 25,100 where we started off with. So yes, we are off from the day's highs at this point of time. If you look at what is contributing to the losses at this point of time, that is your Nifty FMCG index, which is slightly in the red. Otherwise, all of the sectoral indices have been trading with a good set of gains. India VIX that has shot up to about 2% at this point of time. So a little bit of a a volatility is there, which is there in the market. Mid cap and small cap indices, both of them doing well. Small caps with about 0.8% gains, mid caps with about 0.7% gains. So yes, all in all, a good set of markets, and we'll see whether or not the extension of the rally and 25,100 where we started off holds on to it or not. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.